Elfreda Jonker. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Jeff Thomson with me. He's one of the Global Portfolio Managers, and we'll be reflecting on his recent visit to Europe and some of the key themes and stock implications post that. So Jeff, as a starting point, tell us, where did you go?
So I spent 2 weeks in Europe, managed to travel through 6 different cities, saw I think 33 or 34 different companies. Yeah, really exciting, really helpful trip.
Yeah, lucky Jeff. So as a starting point, and well, secondly, what were some of the sort of broader key themes that you would highlight out of that trip?
Look, the bigger macroeconomic theme I'd call out is, we're clearly in a part of the cycle now where we've got, both slowing growth and slowing inflation. So there's a lot of anxiety around the growth outlook. So every company meeting pretty much, there's a lot of anxiety around the US consumer and the outlook for US consumer, the Chinese reopening dynamic. But overall, you had a sense that the real sort of growth rates, again, while slowing, were somewhat resilient. But overall, really strong sense that inflation is now set to fall quite significantly, and that's disinflation, it's not deflation. But I think that's a really interesting setup going into the second half and into next year, with companies with really strong pricing power that can retain the pricing that they put through. It sets up a really interesting potential gross margin recovery story, as I say, into 2024. The other themes probably I'd call out, I managed to see a lot of the insurance companies, both in Switzerland, Germany and France, both primary insurers as well as reinsurers, and really struck again by the strength of that reinsurance hard market. Real strong point in the cycle where they're putting through very significant price increases, which again I sort of came away with the sense that probably is going to be sustained for longer than most people think, and does have implications for some of the primary insurers which have to buy this reinsurance. But yeah, a really strong and perhaps a stronger for longer hard market in insurance was another takeaway. And the third probably I'd call out is electrification. Again, this is real. It's happening across a wide range of industries, and was a common theme in many of the companies that I spoke to. There's underlying that is obviously the transition and reducing carbon emissions, but it is a lot more complicated than you would expect it to be. Really, obviously it comes with a cost. A lot of the companies, whilst they're seeing really strong demand for electrification, are struggling perhaps to translate that into profit. So whether it was BMW in electric vehicles, I met with Siemens Energy, that they're obviously having struggles in their wind business. So yeah, very, very strong theme, and certainly a lot of demand there, but perhaps less obvious at a stock and a profitability level.
So interesting themes there, thanks Jeff. And so what did the trip really do to your portfolio positioning, existing positions, as well as potentially any new additions you've added?
Yeah, I was fortunate enough to see several companies that we already own in the portfolios, and I came away with a renewed sense of just the quality of those franchises. So I'd call out ASML. I had a really great tour of their facilities in Eindhoven, in Holland, I beg your pardon. LVMH, L'Oreal, Schneider, ING. These are all companies that we own in various different portfolios, and I came away with increased conviction, I guess, on the quality of those franchises. In terms of sort of new ideas, probably the one I'd call out would be LSEG, or London Stock Exchange. This is a company we've been doing a lot of work on for several months. It's a fantastic business, owns some amazing franchise businesses such as FTSE Russell, Tradeweb, LCH. It's a market infrastructure and financial data company, has about 70% recurring revenue, so very, very high quality business. But really the upside comes from their trading and banking segment. Several years ago they bought Refinitiv. It's been a sort of long and somewhat painful investment period for them, but there are now tangible signs that that's coming through in terms of increased growth, but also sort of pricing power. Excuse me. And I think there's sort of a margin story over the medium term. And the other thing I really like about the business is they recently announced a partnership with Microsoft, which again gives them really interesting optionality around AI, amongst other things, over the medium term. So that was a company that we have actually added subsequently into the portfolios.
Great. Well, thank you, Jeff. Lots of interesting investment ideas there. So for more information from Jeff and the team, please visit our website on alphinity.com.au. Thank you.
Thank you.